welcome everyone. My name is Arvind Purushotham. I run the Citi Venture Investing Group at Citi and been here for over 10 years. Today, we're glad to host the first Innovators event for the year. We've been doing this as a series and glad to be back in the business here in February of 2022. And I'm super excited about this one because my friend and colleague, former colleague, Shawn Carolan, is here with us. The topic is cracking the customer code. And I think, I couldn't think of sort of a better person than Shawn, who's been thinking about this deeply for, frankly, 20 years, both as an investor and as a practitioner. So briefly about Shawn. Shawn is a general partner at Menlo Ventures, a 45-year-old venture capital firm on Sandal Road here in Silicon Valley. He and I were colleagues and partners for about 9 or 10 years in the 2000s. Before joining Menlo, Shawn went to Stanford Business School, and before that, he was at a startup called Open Port Technologies in Chicago. So his career has spanned the gamut of working at a startup, being an investor in early stage startups, and by the way, also being a founder of an early stage startup called Handle through his career at Menlo. And he's one of the most thoughtful investors I know and I've ever worked with in terms of understanding customer needs and investing on those customer needs. He's been a very successful investor at Menlo, investing in companies like Uber, Roku, and Chime. So companies that have gone on to become household names. Sort of little known is the fact that he was responsible for spinning out Siri from SRI way back before it was called Siri and before obviously it was acquired by Apple and became the product that we all know today. So with that, welcome, Shawn.
Thank you, Arvind, and thanks everybody from Citi for having me. It's a real pleasure to be here. Obviously, we had a great run together at Menlo and have remained good friends since. So it's especially a treat to be here with you.
Thank you. And Menlo's had quite the run. Over 75 public companies valued at sort of an aggregate of over 350 or $400 billion at this point. And one of the things that people ask me and ask us is sort of how do you think about investing, especially in the early stages? In the later stages, there's revenue, there's growth, there are things that you can measure, metrics that you can look at. Whereas in the early stages, very often it's just a team and an idea. And so how do you think about investing in that early stage? Because you're one of those people that I know that focused on that early stage, right? You've always been excited about that very early part of the journey. And so we would love for you to just, talk a little bit about how you think about it, your approach to, investing in early stage companies.
Yeah, great. So, yeah, to your point, Menlo has been around for 46 years now. I've been there for 20 of them, and over the years, you see a lot of what works, but also a lot of what does not work. And I think you tend to learn more from the examples, as certainly I did. And with let's say value investing, right? Benjamin Graham, Warren Buffett, there's pretty well known principles to live by. So you think of like low price, high earnings, like that's good. Low price, high cash flows, that's good. Low price, high book value, that's good. And as you and I know, the companies that we look at have usually zero earnings, negative cash flow, negative earnings, negative cash flow, and their book value is essentially like the software, the code that they've written. So you guys need to say like, okay, if I try to apply the value investing principles, they're all zeros. So you have to come up with a new set of principles that teaches you what happens with growth companies, and that's really what we have tried to do at Menlo. Is like, okay, let's draw a pattern across the companies that have worked and try and distill those into principles. So that gets, I think, to our first slide. I can talk to, I guess it's called our recipe. So, we call these the 4 pillars, and they're gonna sound a little bit like motherhood and apple pie, but they sort of hang together, and then, the arrows that you see on the slides, we call, the avoiding the trap. So I'll start with the leftmost circle, serving a widespread need. So I think all value creation from companies comes from, there has to be a problem in the world. And then you come into the world and you solve it. So we'll double click on that circle in the next few slides, but it's kind of like, I believe you can't really change the market. Like, the market is what it is. People are out there, they're living their lives, and you have to come in and service that market. So that starts the first pillar. You move up now to the uniquely capable team. So that, the reason why uniquely is important is there is no perfect founding team. There's a perfect founding team for solving that, in particular widespread needs. So think of, Larry Page, Sergey Brin were fantastic for Google, PhDs, algorithmic scientists, et cetera. They would not be the best founders for Pinterest, which was much more, artistic, design oriented. So you really have to evaluate, what is it about these individuals? Obviously, there's a bunch of common principles, hardworking and high integrity, et cetera, but there's also unique things about this team that lets them be sort of like the group that is the ones to unlock this, big need, right? Keep going around the circle to, scalable growth engine. You solve a problem for a couple people, your first couple of customers, and then it's like, okay, well, now we need to get out to, the whole world. You want your mousetrap to be the one that everyone buys, if they have mice to kill. And so you need a growth engine that lets you cost effectively get that product out to everyone. And that's not cheap, right? You look at something like cellular service, Verizon spends, $1 billion plus a year on customer acquisition. So if you don't have a cost-effective way of growing that solution, getting it in more customers' hands more quickly, then you run out of steam. And finally, you finish with compelling unit economics. And there, at the end of the day, we all need to be responsible to generating profit. And so if, the unit of your business, which is, I have this customer, I sell them X, and it costs me Y to deliver it, if that's negative, then, you can be as big as you want. And then the arrows, which are the traps, are basically, you have 3 of those 4. And this is where it starts to get interesting in venture. Is I think you see a lot of companies, and I could give you examples for each trap, but that would take too long for now, where you have 3 of the 4, but you're missing 1. For example, let's say, a company like WeWork, right? That obviously, maybe they reconciled it now, but at some point they just had a bunch of these leases that were upside down, right? They were spending more on the leases than they could fill the office space. That's just negative unit economics. So you can kind of grow as big as you want, but if the economics aren't there, you're going to end up going out of business. So that kind of like, completes the
in other words, you need, in other words, you, for being one of those great examples on the right-hand side, be the Uber, Roku, or Chime, I mean, you need all 4 ingredients. You can't do without any one of them.
That's right.
And that's sort of, and you try to figure this out even when the company is quite early, right? And, maybe they have very early revenue, maybe they just have a product, and you're trying to suss this out from all the, pattern recognition and experience over many years.
Exactly. And without, violating the laws of physics. I mean, that's where I think the judgment, doing it for a long time, you can kind of say like, okay, well, this one, you don't have to have a perpetual motion machine to work. And, you can hire people, and you can, look at what business models work. So depending on the business that you're selling, you kind of can project forward like, okay, this is a reasonable risk of execution, or, there's no way that that's ever going to work.
That's terrific. And one of the things that prompted this whole, conversation, Shawn, was some of the work that you've been doing and thinking you've been doing on sort of cracking the consumer code, particularly, right? And we think about that too. We're a large consumer business, and obviously we're a mature consumer business, but we try to innovate and introduce new products and services, and that's what startups do as well. Day in and day out in terms of introducing new products and services, driving that adoption, running the growth engine, et cetera. So with respect to that, I know you've thought about this and sort of come up with this thesis around the jobs to be done and sort of the hierarchy of needs and so on and so forth. So it would be great for you to talk about that a little bit as well.
Great. So yeah, the consumer code, it was kind of born of, to be honest, a deadline that I had. I kind of challenged the team. As you know, the venture industry has continued to get more competitive. And I sort of said like, hey, everybody, we need to do more thought leadership and put our stuff out there and not just, be smart talking to each other and the people we meet. And I looked at, to the previous slide, like, okay, what's common about these companies that have been very successful for us as a firm? And, you look at Uber and transportation, you look at Roku and TV, you look at, Chime and banking, you look at Siri as a voice UI. The pattern is not immediately obvious. It's kind of like all different industries. And so I had to kind of like click up a level and actually there's a good chart that's not in this deck, but like just the consumer wallet, like where are people spending money? And the truly great companies essentially redefine a big category of consumer spend, right? So that led, I think, to a more anthropological approach, and people may be familiar with the diagram on the left, Maslow's hierarchy of needs. And the premise here is, look, like every commerce decision is driven by a human. That human is what they do and how they act is determined by the gray matter between their ears. That has not changed much in 50,000 years, right? We don't evolve that quickly despite our technologies. And so you look at the basic principles, the needs are, food, I need to eat, I need shelter over my head, I need to get places, et cetera, on up through the Maslow's hierarchy. So that really underpins essentially all these companies, is like the needs really have not changed that much, literally in 50,000 years. So of course that's not enough. You need a more precise way to specify these needs, and that's where consumers have different jobs, and this is a framework I'm not going to get into great detail on, but the jobs to be done framework. There was let's see, Anthony Olwick of Stratagen, Clay Christensen wrote a book called Competing Against Luck, where it really digs into how do you articulate a job to be done, but it has to do with just some person is in some situation. They're motivated by something towards some expected outcome. It's kind of like a three-part sentence. You can think about it. So, to use the example to the right, when it's raining and I need to get to a business meeting, I want to stay dry and, not ruin my hair so that I can look good and respectable when I arrive. So that would be a very simple job to be done statement. And then, you see the guy on the left who has a briefcase over his head. That particular solution is not the best tool for that job to be done, as opposed to the umbrella on the right, where, hey, this person's staying dry. So I could ask you, okay, Arvind, what else competes for that job to be done? And it's pretty obvious. Well, like, oh, a raincoat might compete for that job to be done. Less obvious is Uber. Like, when would you think of, hey, Uber competes with an umbrella company, competes with a raincoat company? Well, if I just need to stay dry for that job, Uber is in that competitive set. Maybe I could just run out to my Uber. And so that's what makes jobs to be done theory kind of like a really acute way of looking at, what are these set of problems, right?
Yep.
But then you say, okay, if there's all of these jobs and they haven't changed in 50,000 years, usually if there's a big job, like some big companies are already servicing them, right? You think of like the big car companies or the big commerce companies, the big banks, whatever. So then the question becomes, well, what about startups, right? When we're looking at a company, it may be one person or a couple people. And so how do you say, what's the theory for change for how a startup can kind of come into a field where there's this huge problem that hasn't changed much and then change the game? And that's, I guess, kind of in the next principle, which is the new ingredients is what we call those. And I think of these are sort of like, what are the changes to the playing field? Okay. So you're out playing a game, and if the playing field changes, well, wait a minute, I used to be great when I was a big linebacker, but now I need to, run real fast and catch a pass. Like, you don't want that set of skills, right? So these break into 4 pieces. The ingredient technologies are basically like little pieces of tools that I think of, the 2 pizza team, right? Who's a couple people, 5, 6, 7 people around a table, solving a problem. Well, when a new ingredient shows up that a 2 pizza team can use, all of a sudden the world changes, right? So there's the ingredients, technologies, there's regulatory shifts, society changes, right? Like, climate, everybody's paying attention to, it's going to be easier. So climate technologies and other sort of foundational technologies. So just as an example, think of the mobile smartphone, and in particular the iPhone. You and I were investing in companies when they were the ugly little feature phones, running J2ME. But then, 2010ish, I guess, the iPhone showed up, and it ended up really being a key ingredient for a number of different markets. And think of it, what was it about the iPhone? Well, one, it had a good big screen, obviously, but mobile broadband. It had a GPS chip inside, right? It knew where it was. That was fundamentally a new ingredient. It had an app store so that anybody could very easily download a new app and deliver new functionality. So, I'll just pick an example on the right of Uber. If you didn't have that app store, think of the growth of Uber, right? You needed both riders and drivers to have that app on their phone, right? To make that marketplace. So you needed that app store, you needed the broadband, you needed the GPS for precise location. You actually needed cloud telephony, so that if two people can't find each other on a busy corner, they could call each other, right? You never met, you don't have numbers. So you needed cloud telephony to broker the call. So it was kind of like all of those pieces needed to be in place. And then of course it was a really crappy, app, and one black car that was driving around San Francisco for the MVP. But that pattern, essentially unlocked transportation. If you had this job to be done of, I need to get from A to B, here Uber with, these new ingredients was essentially a better, faster and cheaper way of getting that job done. And thus, this enormous market exploded.
Yeah, this is excellent. And, you and I have talked about this before. Essentially, if you looked at the 2000s or even the 1990s, investing in consumer software companies was not easy, right? There was no distribution. Distribution involved shipping CDs, end caps in at Best Buy and other retailers. It was difficult to get that distribution deal with a large retailer and all of those kinds of things. And that whole landscape changed, and it continues to impact our lives in very deep ways, right? The fact that you have an app store with iPhone or Android or whatever the case may be. Now, one of the things that we also think about within our team when it comes to consumers, our business units as well on the consumer side, is you can think about sort of innovating and introducing a new product. You say, well, we need to introduce all these new features. It's a very complete sort of feature-filled set of, feature-filled product, and you launch it, and then you have trouble getting that traction, right? Because maybe you have to spend a lot of marketing dollars to attract people, right? Attract customers. And one of the things that you talk about that, to me at least, was sort of the most interesting aspect is how quickly you need to impress people that this is a great service or a great product. So talk about that a little bit, Shawn.
Yeah, so a couple things are worth mentioning there. So when you think about, us humans trying to get our jobs to be done, complete in the world, we each have what I think of as a scarce resource, right? There are two scarce resources. You have your time, unfortunately, we get a certain number of minutes of the day, and you have your money, we have a certain amount of dollars in our wallet and bank account, and you're sort of expending those scarce resources to move towards those jobs to be done, right? And so I don't think, the consumer maybe isn't doing the math in their mind, but we all have these kind of ROI calculations, right? Return on investment. So I'm spending time, maybe I'm spending money, and I need to get return on that. So, you think of this kind of like the time to wow is, okay, well, based on, and this varies by job, right? If I'm buying a new house, maybe I'm willing to invest, more time and more money because it's a huge transaction, and I'm only going to do it, every many years. But so the more frequent the behavior pattern, the faster this ROI on either time or money needs to be, and needs to demonstrate itself to the customer, right? So the jobs to be done framework too has this concept of I'm hiring this tool for this job, right? So think of, again, kind of the transportation use case, right? And we we're early investors in jump bikes, which was, I'd argue, the first kind of mainstream micro mobility company that Uber ended up, buying before the scooter phenomenon. But ride if I had to wait for a taxi in San Francisco, you got your hand up for 15 or 20 minutes. Okay, here comes Uber, and instead of 20 minutes, it's 5 minutes, right? And the car came. So that was like faster time to wow. And now it's a relatively short drive, call it, less than 2 miles, and I just walk down to the street and there's a bike or a scooter sitting there, it's not even 5 minutes. It's like, 1 or 2 minutes, right? So this shows up, time and time and time again. And like, I'll give you an example, a very subtle example. Think of Snapchat when it came out of the scene. And a lot of people, I think, point to, like the disappearing messages was such a big deal. And, kids were sexting or whatever. Like, actually, that's not my explanation for it. My explanation is ROI on time, right? Think of if I was going to send you a picture, Arvind, of, hey, check out this, what they did to the old Menlo office or something like that. There were several SMS clients, texting clients that had billions of users at that time, right? Think of like iMessage or WhatsApp or whatever else. But think of how many clicks you have to go through. I got to go in, I got to type a message, I have to like hit attach, I need to go through my pictures, I need to click a picture, I need to, send that to Arvind. So I'm like, 20, 30 clicks in before I send an image. Snapchat was the first messenger to open to the camera. So you think of like, I see something I want to share, and I'm just, I'm looking at the camera. And then I click snap, maybe throw a filter on, it looks cool, and then boom, boom, a couple of good friends, and the job is done. So I think if you really, one, for like where are opportunity sets, you can look at what are people doing that they're wasting time or money on. And our brain, people are familiar with the principle of hedonic adaptation. Like, you kind of get used to what you have, like whether it's good or bad, you get used to it. And so that's part of the genius of the great entrepreneurs of the world, is they kind of see something, wow, that's kind of weird. Why do people, do that? And I have a better way of doing that. And then of course, you kind of introduce your product. And if it's very good, it delivers this ROI on time or money or a higher fidelity experience very quickly.
And that certainly gets people hooked onto that, right? Like, and I still see that in sort of the more successful apps today, even in fintech apps today versus the ones that are not, not so successful. And I still remember the very first Uber ride I took in San Francisco, by the way, right? And I distinctly remember that experience because we had 5 or 6 people in the party. We would have needed 2 taxis, and like 4 minutes later, the guy showed up and he was looking for me and I was looking for him, and it was just fantastic to go through that experience. So
it was delightful,
incredible. And so on that sort of first time user experience, you actually have some examples around sort of Chime as well, right? In the fintech world, which would be very interesting to a lot of people at Citi, actually.
Yeah. So absolutely. So one other point before we cue the slide on this is you made the point earlier. It's very easy, very tempting to kind of keep bolting on features like, hey, it needs to be feature complete. And if you look at all of the great companies that, startups that became these great companies, they actually did one thing, very simply, right? Like one job to be done. And because you're so focused on that one job, you do it, super well. And it's not about all those features. It's about, what is the essence of that value creation? And then, how do you deliver that quickly? Get out of the way. You have your core messaging on it. You get in, you go straight to it in the app. All of the friction is removed on that, golden path. And we have an internal framework, not in the deck, called the MVP tree. So, if you search up, my name, MVP tree, you'll see this. But it's kind of a framework where, everybody starts out with a very ambitious mission. How do you break that into the constituent pieces and then just pick one? Because you don't need to do everything at first. Google, it was like a couple keywords into a box and, find the page I'm looking for. Like, it was pretty simple. Well, Google's a big company now. So, cue the slide for Chime and the first time user experience. So, think of core banking. Again, this is a relationship between, business entity and consumer that has been around for a long time. And you say, well, like, how the hell did Chime come in and make a dent in that? Because it's kind of painful, switch accounts, et cetera, et cetera. And I think it really does come down to this same framework of like, okay, well, what did Chime feel like they could do best in the world? Core checking, right? Core checking for a lot of people was still quite an expensive product. And you don't think of expensive as like, maybe I pay for it, but a lot of people did pay for it. They would sometimes overspend by $1 and get an overdraft fee, right? Maybe they didn't have enough money in their account, so they had a low balance fee. Like, there were ways that people were paying for it. And so I think Chime came in and said, just appealed to a very resonant pain for them. Back then, this was kind of like their first, what I think of as breakthrough feature was, get paid 2 days early. But it was like, okay, you see a Chime ad and it's like, don't pay any more overdraft fees. Okay, that's interesting. I just paid $30 like last week. So you take as fast as possible, right? From the Chime commercial, it's like App Store, download the app. So that takes less than 2 minutes, right? Depending on your mobile bandwidth. So the app's on your phone now, couple slot pages in, you type in your name, you type in your address, and you're done, right? Like for then, but now there's a card in the mail. So you think of like the 2 minutes, download the app and type in a few things, then the mail shows up. Oh, wow, here's my new card. Like that takes, less than a minute. You open up the card. And then, maybe it does a little bit more painful to connect your direct deposit, but this promise of, hey, I can get paid 2 days earlier if I, sign up for Chime direct deposit. Like now I remember that, the next time I go into work, maybe I transfer. So you're never asking for very much for the person, right? It's just like all in, they've only spent, 4 or 5 minutes. But the promise then, once I go through that 4 or 5 minutes of work, is like, okay, instead of getting paid on Friday, I'm getting paid on Wednesday. And look, like better, faster, cheaper, right? I get my money a little bit sooner and whatever, get ready for the weekend. So,
right. Well, I mean, it's hard to overstress that initial user experience and time to wow, as you put it, because I think that's something that not just sort of the large companies in the space, for example, in the fintech space, but also I think even even startups need to think about in terms of, how they introduce products into the market or how they introduce new products into the market, assuming they already have an existing, successful product. And I think we'll, in a minute or so, we'll have the opportunity to talk to Sarah Levy, the CEO of Betterment, on all of these things. Before we leave this section, Shawn, I know for the last few years you've been working on something called Menlo Labs, and maybe you want to tell the audience about the idea there and your vision for Menlo Labs.
No, thanks. So yeah, I'd say, you mentioned at one point I was a startup founder that was kind of mid Menlo. I had an idea. I told you and the partners, hey guys, like let me go start this company. I'll get it to product market fit, and then hire my replacement and be back investing. And of course, that did not happen. The company eventually failed, and a lot of these lessons you're seeing are my lessons hard learned from having tried to build too much, right? Like Handle was this productivity suite, and I ended up, without really recognizing it, building email, to-do list, calendar, like too many pieces, instead of like, here's the one little thing that I can insert myself into your life and get that retention and growth that we're talking about. So Menlo Labs, when I, after the company failed, took 6 months off to cry and apologize to everyone and try to regain my composure and decide what I wanted to do with my life, and came back to Menlo. And I really decided though, like, look, this is important to me, to my soul, to the greater economy. Like if, as an investor, you do feel like you see something, and when I started Handle, it was like pre-superhuman, I think Asana had just started, right? Like no Monday, there's no ClickUp. We're sort of like on the right path, but I was not the best person in the world to do that, right? If you go to the uniquely capable team, I was not the best, product person. I was not the best CEO. I was not the best engineer. And in fact, I had this super high opportunity cost as an investor to like leave, stop investing, and then go do it. So although it ended up being very good for me and my personal development and my soul, it was not the best, business results. So Menlo Labs is really our attempt to kind of combine those two. How can, as an investment team that's looking at thousands and thousands of companies a year, maybe sees a gap. It's always going to be easier for us to fund a company at Menlo But at the times we do see an opportunity or somebody comes to us with an opportunity and maybe they're just like a technical founder, but they're not ready to, pitch or whatever else, can we, bring them in, put some scaffolding and help them find their co-founding team and really pursue it. So I think, everybody knows YC and some of those other options out here. What's really different about Labs is mid-career people, so you're individually talented, like in product or in engineering or in design or like an industry specialist. So you're ready to be a founder. You've wanted to be a founder. You don't want to, quit, hang out in a coffee shop for 6 months, pitch and get denied. You really want okay, Menlo Ventures and friends, obviously we're going to be working with other venture firms as well, say this is a venture scale opportunity. And then we kind of assemble all of those stars so that you're off to the races. And so far we're 5 companies in, and we're doing our first cohort of, calling future founders. Applications are now open. So if anybody's kind of there and, always wanted to start a company, you can, join that group. We're going to take on about 20 people in this cohort, and, hopefully some great companies emerge in a year or two.
That's brilliant. That's great to hear. And I think it could, it sounds pretty unique in terms of how you're thinking about it, the type of entrepreneur you're trying to attract. Well, with that, why don't we switch gears a little bit and then invite sort of the perspective of the entrepreneur and sort of the operating company here. Delighted to sort of welcome Sarah Levy to the conversation. We were very lucky to welcome Sarah as the CEO of Betterment. Back in 2020, Betterment, as people know, is a software-driven advice company that's been around for a while. I mean, Menlo Ventures and Citi Ventures are both lucky to be investors in the company and have been for over 7 years, and the company has grown, tremendously during that time. Before coming to Betterment, Sarah spent over 20 years at Viacom with the beloved brands like Nickelodeon and others, and so has deep experience in brand and deep experience in customer behavior and customer experience and such. So with that, welcome, Sarah.
Thank you, Arvind. Good to see you, Shawn.
Good to see you.
To begin with, Sarah, I think you're familiar with some of the discussions we've been having about cracking the consumer code, when it comes to building companies that are consumer focused, and Betterment has a large direct to consumer business, and we'll talk about some of the business to business opportunities later on as well. But we would love to understand your perspective on how you think about it. How do you think about sort of when you're introducing a new product? Is there a new a framework type of thing that you use to innovate, right? So maybe we'll start off there.
Sure. So I know Shawn loves the jobs to be done framework. I think that I find is a little bit more applicable a little bit earlier, kind of in the journey. So as we think about that initial spark and that initial, how do I to Shawn's point, how do I insert myself into into the customer's life by solving one problem. When I arrived, so Betterment has been around, as you mentioned, nearly 12 years. And so when I arrived, we already had a product suite. So, one of the questions for me in some ways was back to basics, right? Was, okay, we've got these 4 product lines, but do we have the resources and what are we really excellent at? And so, in some ways you could argue we went, sort of back to first principles and concluded that, investing and a delightfully simple saving and wealth creation platform at its core was what we had, but that we were perhaps, again, even to Shawn's example on Handle, maybe there were a few too many bells and whistles and a few too many explorations relative to where we were in our journey. And so, by way of example, we were spending time on cash management, on savings and checking, which wasn't really our superpower. So for me, really the first question was, where's our right to win and where are we really excellent? And specifically, who is the customer we serve? And right now I'm focusing on the D2C piece of our business, because you're right, we also have some forays into B2B, which we can talk about. But I think what was really clear to me was that long-term savings and wealth creation, in a delightful, easy to use, and ultimately mobile way journey, right, was really important, to the point that mobile, when this business was founded, it was really a web-based product first and foremost, because when people think about their wealth creation, right, you sit down, you're thoughtful, you're at your desk, right, and
Right.
still, in fact, our onboarding is much more heavily skewed web. But I think what that missed was that, okay, once you've gone through that kind of emotional process of like, this is the place for me for my long-term security, now how do I create, habits? That sort of next phase is really to be done on mobile. And so that was, I think, one of the big, the big pitches, or the big pivots, if you will, when I got here was, how do we add excellence in mobile that is first as good and then ultimately better than what we bring on desktop. So I think where we are in our journey is much more, not what is the problem we're trying to solve. We know the problem we're trying to solve, but now let's solve it best in class, and let's make sure that what we're doing is, second to none. And then from there, how do we expand?
Right. And that resonates, very well. But, in the beginning, when Betterment solved that initial problem, I mean, it was a problem, right? I mean, people are leading their busy lives. But a lot of their financial future is in their hands, right? Nobody is looking out for them in terms of, are you saving enough for college? How do you invest for college? How do you invest for a down payment? How do you, save for retirement? All of those kinds of things. And I think the insight was that software, using sort of modern portfolio theory and all the literature that was already out there, the insight was that software, in fact, can do a very good job of allocation, balancing, tax loss harvesting, things of that nature, so that people don't, have to think about it, in the middle of their busy lives. I mean, that was sort of our thinking in getting excited by the Betterment opportunity way back. I don't know, Shawn, if you had some, similar thesis around sort of investing in Betterment.
No, kind of like what you said, like you think there's a job to be done too. Sarah's point is like, I have, long-term assets and I want them to grow, right? Like grow them as, fast as you can without putting them as risk is kind of like, it's pretty straightforward value proposition. And maybe I would add into that, how do I feel about the assets? So I think some ways you guys have been very innovative at Betterment. It's like, okay, an ESG portfolio or something like that. Like I want, this capital I'm parking for long-term to, do good things in the world and not, bad things in the world. So that being so easy is, I think, the brilliance of the company. And Sarah, I mean, super happy since you joined, right? Like just, the operating experience, the focus, the discipline, the focus on, the consumer really understanding, the different archetypes that we have and what are, their currencies and the ways in which they'll feel good about, you being their trusted and automated advisor, I think makes sense. But yeah, way back to the very first pitch, I think Arvind and I were in there together. It was like this little slider, debt versus equity, depending on how much risk you wanted to take, and then hit go and move money, and then you were done. And that was sort of the spark that has led to an incredible company now.
And I would add that even from back then when I first set up a Betterment account, all the way to now, the time to wow has continued to shrink, right? Like, that experience is even more frictionless. There's obviously infrastructure pieces out there like Plaid and other things that make it a super simple experience. And one of the things that I wanted to bring in here was sort of the B2B business as well. One of the mantras in venture that we think about is consumerization of the enterprise. Enterprise applications, enterprise users, they're familiar with those consumer experiences and they expect similar experiences and similar, easy to use products on the enterprise side as well. And so how do you think about that a little bit, Sarah, if, because of the B2B aspect of the Betterment business right now?
Yeah, so I'm really passionate about our B2B business, and we're scaling there really fast. And one of the things that we've learned and that we've actually taken from the consumer business and are sort of bringing to the B2B business is exactly that sort of moment of delight and that time to wow, in Shawn's words, right? So we launched about a year ago a buy it yourself funnel. And if you think about, so our B2B business, our primary B2B line, for those who aren't familiar, is a 401k product for small and medium-sized businesses. And we think about that in two ways. We think about it both as a standalone product where we are here solving a very specific need for small and medium-sized businesses where enterprise solutions, the bigger companies servicing 401ks can't really scale down small. And so there are 6 million businesses in this country that really didn't have access to a great retirement solution for their employees that was not only low cost, but to the point, kind of easy to use and easy to onboard. And so we built a great mousetrap, if you will, a few years ago, built a great record keeper. But the problem was that moment of onboarding delight wasn't where it needed to be. And so a year ago, we introduced a buy it yourself funnel where in 5 minutes, I'm a small business owner. I have 5 employees, I have 100 employees and everywhere in between. In under 5 minutes, I can have a bespoke 401k plan for my company. And that is a benefit that employees are looking for. And the introduction of that buy it yourself funnel basically turned what had been an outbound sale on its head, and it made it an inbound purchase. And that mere flipping of that kind of upper funnel was transformative to customer adoption. And then the sort of and to that is, okay, once you get to that end user via their employer, all of the things we've learned on the consumer side can apply because now you're a Betterment customer, right? The participant, the employee is now a Betterment customer and now can take advantage as a B2B2C product.
Right. And that's, very insightful. And then you're also monitoring sort of what's happening in the environment and sort of the latest news from Betterment obviously is acquiring Makara. So maybe you want to talk about that for a second, for people who've been watching Betterment who are interested in the digital asset space.
Yeah. So fundamentally, again, we take a really long-term perspective, right? So we believe in diversification. We believe in long-term buy and hold. We believe in dollar cost averaging, right? All of these principles that say like better to put away money now. You don't have to play the market. You don't have to, gamify your experience and that can happen somewhere else. But again, we're really about setting you up for financial independence long-term. So we determined that, the customers were really asking for crypto and digital assets, but they were coming at it from a place of confusion and saying, just like I don't want to pick my stocks, our customers, just like I don't want to pick individual stocks and play the market because I either don't have time for that or, the asymmetry of information is such that, I don't feel equipped for that. I want to trust a third party to handle that. We felt that there was an opportunity in the crypto space to actually bring some of the same advice and guidance and the same diversification that we bring, almost like an index, but indexes don't exist at the moment, in the crypto space. So we found a very like-minded company called Makara based out of Seattle. And their philosophy was, they were out pitching the betterment of crypto, right? Which really was about long-term diversification, but in digital assets. So we announced last week that we bought the company. We are, the whole team is joining us. We're incredibly excited. And I think we really believe that we will be the first place to offer this kind of diversification alongside your traditional investing assets. And that's really a unique offer, both for advisors and also for our retail clients.
That's excellent. And I just wanted to remind the audience, and maybe in about 2-3 minutes, we will switch over to the question and answer section. And Sarah, we would love for you to stay. I know we have questions from the audience for you as well. So I guess the thing that I was thinking about with respect to Betterment's journey and connecting it to some of the early stage insights that Shawn talked about is essentially a maturation, right? So you start as a early stage company, you solve a particular problem that humans face, but that people face, and then you sort of have that initial phase where it's maybe product-led growth, and then you need to be a brand-led growth company, right? And it feels like Betterment is sort of making the transition, especially on the direct-to-consumer side, of being brand-led growth, and the company is maturing that way, even though some of the principles we talked about will still be very important for the new products that we want to introduce at Betterment, correct?
Yeah, I mean, I call this our awkward teenage years, right? So we're sort of moving through. We've graduated out of childhood, and now we're sort of trying to figure out who we want to be when we grow up. And I think you're exactly right. And one of the things that drew me to Betterment was the brand and the mission, which I think is a really important part of kind of what anchors us here. So our mission is making people's lives better, and that's an incredibly aspirational mission, right? It doesn't even mention finance or money or any of that. It really is about, how can we think about getting you to a better place long-term? And through that lens, I think we are really, we did a rebrand this year. We have a campaign live now that I think in some ways says it all, which is be invested is the campaign. And we often put other words in between be and invested, right? Be fight for your planet invested, be invested in yourself, be invested in your portfolio. But the idea of be invested is really, we want you to, to Shawn's point earlier about like the world and values and resonance. We're doing a ton with ESG. That's been a huge part of our maturation. But I think at the core, it's about knowing your customer and being maniacally focused on that customer, and then being a brand that can grow with them. And so coming back to kind of where you started the discussion about, do we have a jobs to be done framework? Or, for us, it's not so much about a framework as it is about that customer right at the center and our mission and where those two intersect. That's kind of how we think about how do you build from here towards making people's long-term security even that much better.
That's excellent. And anything that you would add to this, Shawn, in terms of what Sarah just discussed?
I think it's great. She's said her and team are doing great work, and the crypto approach that they have taken, I would just underscore, like, very thoughtful in that. Hey, I want it to be really easy to put my money there and have it grow, right? Like, I gave my 16-year-old a little bit of money in Coinbase to try and invest the Carolan family for crypto fund, and guess where that one went? so that approach didn't work, but the Bakar approach, I think, makes a lot more sense for your average person.
Excellent. Well, with that, we want to sort of wrap this section up, and for the last 10 minutes or so, want to move to questions. I know there's been a ton of questions that have come in from the audience that are, here's the sort of Slido information for people to ask questions of, Sarah or Shawn or anyone. So with that, Arthi, can I turn it over to you?
Yes, thank you, Arvind. And thank you, all of you, for this amazing conversation. So just a reminder, as you see on your screen, go to Slido, enter hashtag Innovators, and then you have to enter a password, ECLES hashtag. So Sarah, thank you for staying a little bit longer as well. We have a lot of questions for you. The first question that we have for you is, how do you think about the different segments in wealth? Do millennials have different goals from Gen Z? Do men invest differently from women? How do you adapt to that and customize?
Yeah, so it's a great question. And when I think about sort of my predecessor founding Betterment, he was really a pioneer in this idea of robo investing. And, as Arvind mentioned, right, it was really about how can technology democratize finance, but bring, traditional wealth management to a broader group of people at a lower cost, and then deliver outsized returns via tax tools and things like that. And that's really kind of was the first decade. And as I think about this next decade, the question of personalization is really what everyone is looking for. And fundamentally, a goals-based platform is personalized, right? You come to our platform and you tell us, I'm saving for a wedding or for a house or for a car. And therefore that's personalized in terms of your time frame and therefore your investment outcomes. But what we've seen in the last kind of eight or 9 months is we've started to add more curated investment opportunities, an innovative technology portfolio, 3 socially responsible investing portfolios. And what we're seeing there is that when the customer kind of votes with their values and makes a choice, you have a more engaged user. And you also open the aperture to more investors. So we're seeing, for example, higher net worth investors are more interested in the innovative tech portfolio. When we think about socially responsible investing, we're seeing more women attracted relative to our base user. So I think this is teaching us stuff. As we go, we sort of learn and adapt. And we think crypto, there could be the way we're approaching crypto by playing the asset class. We think there's an opportunity for women there who may be a little more reticent, to bet on the individual assets, but really want to participate in the growing economy of digital currency.
That's great. Thank you. I have
And
more
if I
questions.
might just add,
Go for it.
women are better investors than men, statistically speaking.
We're more patient.
There's been several research studies, and I don't know what we're doing wrong, but we're losing.
Mhm.
That's great.
Makes sense. The next question for you, Shawn. First of all, I thought the way you presented the model and how you guys are thinking about it is a fantastic way to think about it. What jobs or consumer spend categories do you think are most ripe for redefinition right now? And what new ingredients are there that you're watching that will help to get us there?
Oh boy, that's a long one. I'll just name a couple. I mean, an interesting one to look at is Web3, blockchain, cryptocurrencies, because there's a lot of jobs to be done that are not sustainable ones. So for example, like speculation on Dogecoin, or it's like going to Vegas, right? So that's not actually the job to be done. But for example, like trusted transfer of funds between two parties that don't know each other, that's like really powerful, right? So far heretofore on the planet, we've kind of needed trusted intermediaries, like banks. So that's a really interesting one. And especially you look at international remittances where the tax could be 5, 10, 15%, or some of these hyperinflating currencies where if I just put it under the mattress, it's depreciating. So blockchain and cryptocurrencies and Web3, like kind of immutable records of who owns what, like those are really powerful ingredients. And I think what you're seeing the world try and find out right now is, okay, well, what are the sustainable use cases that actually solve these jobs to be done versus people just speculating, which they always have, or NFTs feel more like tulip mania to me than they do like these kind of core principles. So that's one. I mean, a lot in transportation, electrification of transportation. I do think sustainability, like we're all, if you're not, as an intelligent person on the planet with, some financial and intellectual resources, if you're not thinking about climate and how do we, build a better future for our kids, then I think, I feel negligent. So I'm okay. How do you do that in a way that also can be economic to people, right? So carbon credits, training, or companies, having software to monitor their outputs is interesting. Everything going electric, like essentially get rid of internal combustion. So I could go on forever, but given the PA here, I'll stop.
Understood. So, there's a lot of questions about digital assets, your new investment, Sarah. Love to hear a little bit about your vision for that for the future. And Arvind, there are questions, what is Citi's perspective on digital assets, and what is your thesis on where that's going?
Yeah, so I mean, I'll tell you quickly, our thinking around the Makara acquisition was really that this is an asset class that's here to stay, and that the average investor may not be able to, to Shawn's point, is it Dogecoin, is it Bitcoin, is it Ethereum, or is it, the Web3? Like, I don't want to guess which coin is going to be the winner, and I think a lot of investors are in that boat. So our viewpoint was, how do we create an opportunity for the average investor to play that marketplace and to play that index, so that the winners and losers don't matter, but over time we believe that there's going to be a lot of change driven by the digital ecosystem. So so that was really our philosophy. And in terms of how does that manifest itself in product, we will be launching in the next couple of months, we will be launching a set of portfolios that retail investors can select between, and we're still working out the details of what those portfolios will look like, and then probably an even deeper set of portfolios and educational resources for advisors, because what we're hearing from the advisor community is that their clients are looking to learn, and the advisors don't have the tools to help them figure out where to do that. And we have a lot of advisors on our platform that will be servicing with those solutions.
Right, and Arthi, to your question about what is Citi doing in terms of DLT and digital assets, I think Citi has two major large businesses: the institutional business and the consumer business. And we have heard from several, from both sides, right? Both institutional clients as well as consumers, about their interest in investing in cryptocurrencies and digital assets in general. So I think the interest among our client base is there. I think across Citi, both again on the institutional consumer side, we're doing a lot of work. We're understanding the market, we're understanding the regulatory needs and sensitivities around it. So we're taking all of that very seriously. One of the things that we think about is what are some of the infrastructure layers and infrastructure pieces that you will need for this ecosystem to thrive, and safety and security is an aspect of it, right? And that's obviously a top of mind issue. So an example of something that we did last year is we invested in a company called Menlo Labs, which does KYC and transaction monitoring of in the crypto world, in the digital asset world. And so we want to learn from those kinds of things, adopt technologies that promote the safety and security, obviously look at and consult and collaborate with the regulators as well, and then be just thoughtful and careful about it. I mean, I think that's probably a good way to summarize where we are.
That's great. One question that's for Shawn, but I think could be really interesting to hear from all of you, and particularly from you, Sarah, as a company that works with investors. How does Menlo differentiate itself from investor like Y Combinator or other investors? Why are you a better choice? Same question for you, Arvind, and then Sarah, from your perspective, like what is it about Menlo and Citi that made them good investors?
Two things I'd say. I mean, let's face it, venture capital is a services industry. The entrepreneurs are the heroes. They're doing the hard work, building these companies, and we're all at the highest level, like a check. Anybody's check is going to meet payroll next month. So you say, where does that leave you to differentiate? And I think of expertise, right? Like it takes a long time to really get to know space, the ins and outs, the nuances, like the difference between mania and genius at the earliest stages. It's not super easy to differentiate. I mean, think of Elon Musk pitching his electric car company, and where did that go? So you've really got to know the ins and outs of an industry, I think, to make those calls super early. That's one. And then two, I think financial decisions, as you all know, they're emotional ones. And so we care a lot about, being all in the background, all in on the journey with the entrepreneurs. Like, how can we be supportive? How can we be empathetic? How can we, add value, right? We've got a fuel team that helps with talent and marketing and business development, whatever else, and just, do everything that we can, which frankly isn't much, to support the entrepreneurs on their journey relative to what, they're doing.
Arvind, you want to take it or you want me to take it?
Yeah, no, I just add briefly that, as strategic investors, I would say, think of ourselves as being somewhat differentiated from institutional investors. We bring a different kind of network, to bear in helping our portfolio companies. Like any other venture investor, we think of ourselves as sort of being the champion of the entrepreneur inside Citi, external to Citi, and we try to help our portfolio companies in a variety of different ways, help partner with Citi where it's appropriate, get them connected to our network and use our resources to help our portfolio companies. And in most cases, that's very different from the kind of value proposition that a Menlo or any other top tier investor would bring to the table. So it's a very complementary set of things that we bring. And I think in the last 10 years, we've seen sort of strategic investors or corporate investors be sort of a class unto themselves, right? And most companies want to take some money from corporate investors or strategic investors because of the differentiated value proposition. So maybe I'll just, leave that there. I mean, on the flip side, from Citi's point of view, we learn a lot from investing in these companies, and that's why we exist in many ways. But I think the role we play is thinking a lot about what how we could contribute to the success of the startup. And Sarah, I'll turn it over to you quickly.
Yeah, I mean, I would echo what you both said. You know, Menlo joined us, led our Series B, so that was in 2012, and Citi joined us in 2014 in the Series C. And I think both firms at the time, you know, had a really long-term perspective, which when you're building a trusted financial institution, right, sort of this is a long-term proposition. So I think, you know, they believed in our vision and they believed they were willing to, you know, stick with us for the long term. And so those have been some of the best parts about both partnerships. I would add, Arvind, you know, this predates me, but I know that Arvind and the Citi team were really helpful for us when we looked at the 401k space for the first time, and were really instrumental in helping us think through how to approach that business. So to the sort of strategic value they brought, you know, we really have appreciated that partnership.
Well, we're at the top of the hour, so this has been brilliant, fast-paced. I love it. Sarah, thank you so much for joining us. Shawn, you as well, and for sharing your insights around the consumer code, and to the audience for joining us. And so this is brilliant. Thank you, Arthi and the Marcoms team as well.
Thank you all, and yeah, Arvind, congrats on doing great work with Citi Ventures program. I mean, really, I've seen you build it from scratch, and you're doing great work. So you and the team deserve a lot of kudos.
Appreciate that.
Thanks for having us.
Excellent. Thank you. Goodbye.